It's good to be back at this webinar, speaking to you all again. As Anthony mentioned, my topic is going to really be on the 2024 compliance supplement that's already, let's consider, a little bit outdated as far as uniform guidance changes that will be coming in the future. So we're kind of in that tweener period. We kind of got through, for most of you, probably your single audit for your 2024 year. So hopefully the compliance supplement was able to help you through that. And then, of course, with the uniform guidance changes aren't really in effect yet. They will be in effect. We'll talk about those key dates in a minute. I'll just give you a little bit of background. As mentioned, I'm an audit principal at Sikich. I spend a lot of my time, probably most of my time, in higher education and specifically in the compliance area as well. So we're going to talk about, as mentioned, key takeaways, really be the highlights of the 2024 compliance supplement. There weren't too many, so this is a pretty brief presentation, but also learn about some of the key upcoming changes with uniform guidance that could have an impact on your institution. Really the highlights, this, as I mentioned, it's a little bit outdated now, obviously after our last higher education webinar, but happened back in May of 24. The new compliance supplement was issued for May of 24, and it really applies for years ending after May 31st, 2024 and after. So most of the higher education institutions we work with typically have May or June year ends. So this would have been in effect for most of the institutions we work with. In addition, obviously, if you're a June 30 year end, that's a quite common one we see, at least. I know in Illinois and some of the surrounding states of our firm, we do see that as a pretty common year end for higher education, but we do see May year ends, and I've seen September and some other year ends as well. So it really depends on your institution, but you should have been following, of course, the 2024 supplement for your year. So what are some of the changes to it? Well, for you all, the student financial aid cluster is obviously the most important. And really the revisions, there was a few revisions around cash management. So your auditors might have asked you for a few more things there this past year, and also on the FISAP report, which is the fiscal operations report. That report had some changes as well. But really the most significant changes, the one we probably struggled with the most is our firm and our clients as well. Well, some of that additional requirements by the Department of Education to include very detailed related party information. They wanted to know related party transactions. They really didn't give us a threshold for materiality like you really see in a financial statement audit. So really, and those notes had to be within the notes of the financial statements, that they wanted that related party activity. So it was something that we struggled with as a firm. I know there was original guidance from even the Government Audit Quality Center, were really advised at that time, early on, before we got more clarification, that we could potentially consider it unaudited because you're looking at very small transactions. A board member could have donated, $500 as a gift, and that would have to be disclosed as part of the related parties, which clearly in the financial statement audit would be deemed immaterial. But we had to really determine what was really needed to be disclosed in there and how we had to treat that. So that was really a big challenge this past year for us as a firm, because really you're in a kind of a balancing act. You're really trying to protect that personal identifiable information, which the Department of Education is very strict on, but also complying with the department's requirements. So it was kind of a really tightrope, as you want to say, this past year. So what we did as a firm, and I know other firms have done the same thing, is we basically decided to use two different forms, or I guess versions of the report that would go to the various departments. For example, Easy Audit, that version would include all that required disclosure. So we would have, and we kind of did our thing with our disclosures. We kind of had a related party disclosure that included who the person was who donated it, what was the nature of the item, was it a gift? Most cases they were gifts, but there are circumstances where board members might have provided services to the institution. For example, legal services. Maybe they did pro bono work on some legal things for the institution, or it could be a contractor who worked with the institution as well. Those should be noted in conflicts of interest, of course, but we also have to disclose those in that related party activity. So we were advising that two versions. So that version that went through Easy Audit, because Easy Audit's not a public record, but it is obviously required by the Department of Education. So that version of the report, we called it the DOE version, the Department of Education version, went to the Easy Audit. The second version, though, that we did not have the detail. It had a related party in total, because you have to disclose related party, but we just kind of summarized it and total contributions from related parties, whatever that number was. That version is what we actually had the institution upload into the Federal Audit Clearinghouse, because the difference is, of course, the Federal Audit Clearinghouse is public record. So we did not want that personal identifiable information out there that anybody could access to be able to see, oh, I see what these board members donated, for this particular institution. So that's what we did as a firm. I know other firms probably did some of the same thing. Whether your firm suggested that, hopefully they did, to have that two versions, so you weren't submitting a lot of public record information. The thing that they also mentioned, just kind of emphasize again, make sure as an institution, I know the auditor is supposed to do this, but they may not know all your grants as well as you do. Be sure that Part 5 lists all the different clusters that have to be included as clusters and audited as clusters. I know the student financial aid cluster is the one you're probably most interested in, but you have to also be careful. There could be some other clusters. I know a lot of institutions have the TRIO program. That's a cluster we see quite a bit, and some of the workforce grants that also that come into clusters as well. You have to be careful for. So those are all listed to be sure that they're not missed, because they have to be audited as one program. So we want to be sure that you understand that. And then, of course, the catch-all one, the R&D clusters, is another program that federal program that could be large, depends on the institution. Give you an example, the Ohio State University, your recent NCAA football champions, their R&D cluster is over 100 pages on their CFA. There's over $423 million of direct funding, and I think $104 million of indirect funding, all in the R&D cluster. Their R&D cluster actually supersedes, or actually is greater than their total student financial aid. So total financial aid was $415 million, and their total cluster was $527 of R&D. So it's very imperative that the institution identifies that, because when I was looking at their CFA, they actually had R&D programs from every federal agency. So on the single audit purposes, you have to actually group all those together, and is all considered one cluster, even though it could come from every different federal agency that's out there. So that's one thing to make sure that they're aggregated on your schedule of federal expenditures. So uniform guidance changes, that's really the main topic here, because that's coming down the road, of course. So what's the impact going to be on you all? That's kind of important to you all. And one thing that's noted and kind of emphasized a couple places is the recipient should have written and documented policies and procedures. That's really important, because you might have that policy and procedure noted in your head, but the department wants to, or the various departments, the federal agencies want you to have that documented and written in those policies. So what was the big change? The big change obviously happened. It was noted, or I guess we were all notified of the uniform guidance changes back in April of 24. So that is something that gave you obviously the advance notice. However, it's not into effect until years beginning on or after October 1st of 2024, and with any years ending, of course, September 30th of 2025. So for most institutions, as I mentioned, that are June 30 year ends, we still have a little bit of a wait. You still have the 2025 year to get past, and then we'll be looking at, of course, the 2026 year for you all. Now, there are a few institutions I assume would have September 30, 25. So they'll be the test subjects, I guess, of the new uniform guidance. They'll be the first ones to have to adopt the provisions of the new uniform guidance. So what are the big changes? Well, the biggest change, of course, is the threshold change. Now, for 99% of probably individuals on this call, it probably doesn't have much effect, because most of the institutions, at least ones that typically we work with, are going to be over that 750,000 threshold, and maybe that million threshold doesn't really change much. So those institutions might not be affected a whole lot. However, what could be the bigger effect is the type A threshold. As we can recall, type A programs are those federal programs in the past that were $750,000 that have to be audited at least once every 3 years. Financial aid is usually audited every year because it's such a large component of the institutions. But sometimes, as I mentioned, schools have other grants that need to be audited periodically. For example, I mentioned a TRIO cluster. That may be a smaller program, clearly not the size of your student financial aid, but if it was over 750, it had to be audited at least once every 3 years. Now, if that threshold increased into $1 million, that gives you some ability to stretch that out, not maybe potentially have to audit that program as frequent. There are other programs that institutions have. I mentioned the Workforce Innovation Opportunity Act, the WIOA programs, things like that sometimes are audited within that threshold as well. But that does give a little bit of a relief going from $750 to $1 million for that. Another thing that was noted in the section 200-303 I wanted to emphasize is they added a requirement that subrecipients and recipients take reasonable cybersecurity and other measures to safeguard information. I know if you participated on the webinar yesterday, we learned a lot about GLBA and how important that is. The institutions adhere to that. Well, this new requirement from guidance is now opening it up to other types of not-for-profits and governments that maybe weren't subject necessarily to all the GLBA requirements, but are now part of uniform guidance. They kind of fall into that. So I'm not too worried about the higher education institutions because they've been having to follow GLBA for quite a while. So they should be able to meet that requirement basically by long as they're meeting the GLBA requirement. This new section in uniform guidance, I think they should be safe with. Now, it's interesting that the OMB didn't exactly provide what that framework looks like. It's kind of like it's really up to the federal agencies to provide more specific guidance. They kind of said, they didn't give that framework that we always wanted to see, like what's exactly required. They don't really note that in the uniform guidance, but it is important that you talk with your IT people to be sure. As I mentioned, if you're following GLBA and you've been able to meet all the requirements of GLBA, I think you're pretty safe there because like I said, the higher education sector, this has been communicated with GLBA for quite a while. There were some obviously enhanced information that Jeff Hay talked about yesterday at our webinar, but I think that should be fine. Most institutions should be not really concerned about this new section in uniform guidance. Some of the bigger changes, though, involved procurement, and we talk about equipment real quick. The capitalization threshold changed from 5,000 to 10,000 minimum. That helps a little bit, not having to capitalize some of those really small expenditures. Obviously, some things continue to be emphasized. These aren't new things, but maintaining property records, that's always important to be sure you can do that. The one thing I want to mention, the second bullet point there, is conducting some sort of physical inventory. It's good to use inventory tags if possible. At least do that inventory at least once every 2 years. Obviously, having a system in place to prevent property loss is important, making sure things are insured. If it's an asset required with federal funds, is it properly insured? Is it maintained? For example, vehicle, a lot of institutions have vehicles. They might have received a grant to purchase those vehicles. Make sure you're doing, obviously, the maintenance on those vehicles, keeping the vehicles in working order, making sure they're insured. Those type things are important. And obviously, too, if there's dispositions, any disposition that has a market value of over 10,000, make sure you get the instructions from the federal agency on how to dispose of that. Sometimes they let the institution or that grant recipient keep it. Other times they have to sell it or return it. And then maybe if they sell it, they have to return the funds. Procurement methods, these are probably the biggest changes I noticed when I looked at some of the highlights from guidance is change in terminology. We have they introduced more acronyms, like we needed more, but they did include some new acronyms and obviously change some terminology, which it's tough to get used to the new stuff when you're so used to hearing some of the old ones. But we're going to quit talking about a few of them in a few minutes. Really, we changed the small purchases, so that thing that was above micro, but it was still not a large purchase. It's now called simplified acquisitions, and then both micro purchases and simplified acquisitions are just types of procurement methods for that small purchases. So the old micro micro purchase threshold was 3,500, it's now 10,000. So that does help out a lot. Not be able to have to document as much as you did before. Be able to say, purchases of over, $5,000 don't have to, fall under that micro purchase now. They did give you up to 10,000. Now there is even a higher threshold available. You can self-certify. It requires more documentation, but you can self-certify technically up to $50,000 on an annual basis. There's some requirements before you do that, though. Really, the couple, you have to be a low-risk auditee, and that's the biggest hurdle there is making sure you didn't have any material weaknesses in the prior year to be able to have a last 2 years to be able to consider a low-risk auditee. And also, you have to have an internal institutional risk assessment that helps identify, mitigate, or manage its financial risk. So it wants you to do some things to prove, I guess, that you're responsible enough to manage a $50,000 procurement set versus the normal micro purchase, which is down to 10,000. If you over 50, there's potentially still could get approved if you get approved by your cognizant agency. Now, also the federal simplified threshold, formerly known as a small purchase, I mentioned that new change, that increased as well. So it went from 150 to 250. So there is, once again, some leeway on what you have to do to document your procurements. So those purchases that kind of fall in between, right? There's going to be that micro purchase and the simplified acquisition threshold, that MPT and SAT, kind of between the $10,000 and $250,000 threshold. They have to follow the simplified acquisition procedures, the SAP, and show reasonable consideration for those supplies and services. So these are some of the requirements there for falling in between that tweener time, I guess, between the 10,000 and 250. Need to have prepare a scope of work. Should give preference to small businesses if you can. Obviously, not all small businesses can satisfy some of those contracts. Seeking price reduction. Obviously, you're trying to seek a lower quote if possible. There's some other requirements too. There's actually, if you look at the performing market research is important. These are all ORs here. So if you perform a market research with a minimum of 3 contractors, you can go on the website GSA Advantage to look for those potential contractors. So you have to at least seek a minimum of 3. If you review, you could also look at price list and eLibrary if it's something that's regularly priced out by contractors. You can, at least as long as you document you reviewed at least 3, you're okay. Or finally, you could actually request quotations. If you go into the GSA website, you could actually submit requests or quotations from any of the scheduled contractors that are listed in that site. So you have some options there for those procurement. That's for that 10,000 to 250,000. As long as you're doing your homework and you're actually looking for potential responsible contractors, things should be fine for that. And then that really large contracts, those ones really above the SAT, those ones that are greater than 250, you have to do a request for quote, RFQ, and it has to be posted on the GSA eBuy website. So if you, this is actually a hyperlink. If you clicked on the GSA eBuy, it'll take you to that website. You could see how you have to post that contract for that. So subpart 13.5 provides a special authority. There's always exceptions in certain cases for commercial supplies and amounts exceeding the simplified acquisition threshold. So those are even the larger ones, and those ones, but it can't exceed up to 7.5 million. So that's kind of the cap of it all. But over 250 is where you have to really do more, I guess, more heavier lifting to get to that quote. You do have to do that quote there as well. And that's all. I came down to the end of my quick presentation on uniform guidance. So I appreciate the audience listening on some upcoming changes for uniform guidance. Obviously, there'll be more to follow as we get closer to that date of September 30th, 2025, when we could all appreciate some of the changes that are going to be in effect in that time frame.
Ray, thank you so much for the update on kind of everything going on with the uniform guidance here. For those of you that know Ray, I just want to call out and give credit, um, and say what a brave thing it was to mention Ohio State. I know the wounds are still
Yeah.
open and painful on that. For anybody that knows Ray is a diehard Notre Dame fan there, so it was big of you, Ray, to
Yes.
to use that in the example there.